Good evening, I'm Giuseppe Basile, I'm the NDZUSD trader. You can find at the website www.fibstalker.com. I also post regularly on Twitter using the Fibstalker nickname. Good evening, actually good night. It's 30 minutes past midnight here in Toronto. It's Thursday, May the 15th, 2014. And in this video I'm going to review, it's not a weekly review, rather it's a daily update. So I'm going to remove this just to not create confusion. And this is a daily review for 4 of the major markets I follow: the pound versus the US dollar, the Australian dollar versus the US dollar, the US dollar versus the Canadian dollar, and the New Zealand dollar versus the US dollar. So I start from the pound versus the US dollar. The daily chart is what you see on the screen. After we hit that area of first target from a busted daily setup here, you will remember that this market is actually provided support at this 158.45, tested first target and second target, and after that we had a busted setup, from highs to highs here. This level actually breached, although just marginally. But was able to bring price right into the first target. When that happens, we know we get some profit taking very quickly. This is what is happening at the moment for the pound, and the market is quickly approaching next level of support where we could see a bounce. Now, this bounce does not mean necessarily that we're going to see new highs. This could be just a dead cat bounce and a continuation lower. This market is actually in a very similar situation as the euro. So if we lose this 166.65, it becomes very probable a full all the way halfway back here into the last year July to highs that we saw just in the beginning of May here. So there's a possibility for the start of a larger retracement. So am I worried we're not going to get this market? Not really, because this market will actually offer a retracement before or after, and using the fib stalking technique, somehow we'll be able to capture a good part of this move lower. So I'm not worried about that. Moving to the Australian dollar versus the Canadian dollar, this market is actually still strong here. It had a reaction from a level that so far I was not able to identify, and actually it's not a very useful exercise. Could be this level. This level does not make any sense to me and to program trading, I believe. So I think that eventually and especially if the US dollar becomes stronger, this market will keep correcting. So will actually continue its move lower. This measured move, this support here does not come from higher time frames. This has to be very, very clear here, but comes from lower time frames that picked up this price without the support from the daily time frame here. So the daily, we know that the daily program trading will be ready at this 190.60 to try to attempt to push this price higher, not here. So to me it's very important to study the sequence of measured move and higher. So in the 4-hour chart, you will remember that I mentioned this trace. However, there is a better trace which I could only identify after the fact, but the fact that it was identified after the fact, it's not a problem. Actually, we can still use effectively, and as you can see, this is a better trace. So it's the high on the 4-hour chart instead of the high on the daily. So so far, this has been working very well. 93.22 for the support, bringing price into first target, and And of course, look at this, what happens. The confirmation that this is the right anchor that program trading is using came from exactly from this. And actually yesterday the 93.35 was retested, actually was tested, so there was an opportunity to entry for a long entry here, which would have given a risk-free trade if you were to trade this. And actually this is, you know, can be actually very easily seen here when we study the sequence of measure move lower on the 15 minutes. So if we want to do that, we start from the highs. We knew that below this level actually there was an entry here, and let's see again on the 15-minute time frame. This is the highs to highs and highs to highs, an extension long. So this is the area that we had to study. And as you can see here, this market started moving in extensions on the 15 minutes right away. And let's see how we can model this. So one way could be to model it with this trace. There may be a better trace here, but the point is that all the traces produce an extension here. And I'm going to remove the this measure move is not the best one, so this is the measure move that worked and actually brought price into first target, but and then there was a retrace into the next measure move. And as you can see, this sequence continued. So however you trace that, you can see here that at some point this market started trading in extension. So there was also a violation here, because we saw this market violating and then violating this level 93.46 and then pushing prices into the second target. And that was an indication that you know, this market was actually reached the actually broke the sequence. So the entry could come at 93.43, and this would have produced you know, quite a good trade. Of course, if we consider this, and if you are trading on the 15 minutes, there would have been a stop out here. But when we get a stop out and with a confirmation and the support is confirmed, you see here that the next trade is always a trade with a very small risk, which is capable of offering multiple reward to risk here, up to 5 here. So it's true that you lose 1 unit of risk, but then you make 3 to 5 units of risk. So you know, that was a good way to make a trade there. Moving to the US dollar versus the Canadian dollar, you will remember that this market, I consider this market doomed, and now this market is continuing lower. Why is this market doomed? Because actually it failed the support, the important support that was identified back in here in February here. And as you can see, this support held twice and then failed. So on the daily time frame we are continuing lower. So the point to me, it's only to know which of these two traces is actually currently working. There's a possibility that this one, 109.33, 109.25, this is 8 pips, so it might not be this one. We might be trading, you know, a dirty setup here. But see, both these trades, they've been priced into 107.68, and you will remember that I mentioned that, you know, this market could be, you know, could be aligned to the pound versus the pound versus US dollar and the euro versus US dollar. That's what I see in this market. So not easy to trade though after we broke that level. Of course, if you go back to the sequence here, the sequence must be studied on the 15 minutes, because on a bigger time frame it's quite difficult to see that But when we move to a 15 minutes here, the reason why it's not easy is because of this huge 15 minutes bar here. So it's we need to identify a level here, and it's quite so we should actually even go on the smaller time frame in order to identify this. So we need to go on the 1 minute time frame in order to study what is actually happening here. So, and the reason for that is we had let me see. Yeah, we had this move higher here, and it's very difficult to pick an actual anchor here to study this market. So I will leave it at this right now, as I want to cover the New Zealand dollar versus US dollar. But basically, we will need to find here, if you wanted to time that, where the anchor is, and in this case the anchor is probably this one, as it started working. So this is the measure move, and then eventually, you know, the market failed this measure move eventually. So that's where the signal to enter short was. Moving to the New Zealand dollar versus the US dollar, this is a very interesting market, gave me very good satisfaction so far. And you have to remember, you have to know that this market has provided a sequence, a very nice sequence of measure move, extension long, first one, second one to target, and now there is the third one. But see that this third one has not been tested so far. So to me, this is a market is being picked up by in the smaller time frame, is being pushed up. So to me, there will be a level of resistance very important here, and if the sequence of measure move higher here fails around this 86.91, I think this is going to be a very good opportunity to short this market, at least into this 85.84. Then we will need to see there whether it continues lower or it bounces. But remember that this 85.85 is the next measure move long, so this market is not in short, not at all. This would be the first short, and we still have a support level that has to be tested, so it's not even a safe short. Of course, I mean, if the sequence of measure move higher by applying the Phillips stalking technique will fail around these levels, I mean, we'll give a shot lower into 0.85. And so I just want to look at the 15 minutes, or what's going on in this move higher here. And let's look at the 4-hour chart just yet, and for now. And I'm gonna study this sequence of measure moves starting from this bar on the 15 minutes, and as you can see, there is not really a lot of price history there, but still, you know, we can see that this big tail here is not being used, because this market is actually traced into the 86.42, and now it's actually failed this sequence, and so probably came into all the way halfway back here, which is this level from lows to highs, and in fact it did. So this is the area that so this is the trace that I'm gonna keep in mind here. And if and as you can see, the first target nicely lines up with that area of resistance there. This is the 0.8690 here. So if we get there and the next measure move fails, then this short becomes an entry, and you can apply the fib stalking technique. If you want to learn more about the fib stalking technique, just subscribe my newsletter and give a look to my website. There are a lot of videos, almost 500 videos review, and there is a lot to learn there. Thank you very much for your attention. I wish you a great day tomorrow, and see you soon. Bye bye now.